This is your LMAX Exchange Technical Update for Thursday, March 2nd, 2017. Euro dollar. So the euro is broken down in recent trade, but it still hasn't taken out that key support, which would suggest that the market's ready for a bearish continuation back towards the 14-year low from January at 103.41, which guards against that critical parity test further down. We would need to see a close below that low from last week at 104.94 to strengthen that bearish outlook, because inability to establish a close below 104.94 will suggest that the market could be putting in a more significant longer-term base down here, with an inverse head and shoulders formation potentially taking shape on the daily chart. Of course, we would need to see a break back above 106.80 to make that come true, or at least to strengthen that possibility. But right now, it's going to be important to see if the market can establish a daily close below 104.94. If it can, then we're looking at an acceleration of declines that could expose a drop towards parity. If it can't establish below 104.94 on a daily close basis, then we could see a bounce back above key resistance at 106.80, which changes the picture. Sterling dollar. Cable has taken out some key support at 123.47, and this exposes a drop back towards that range low, that range base that we saw down below 120, initially that 1987 low from January 16th of 2017, which guards against that critical plus 30-year low from October at 118.41. At this point, if the market does bounce, it should continue to be very well capped into rallies, with only a break back above the December peak at 27.75 to compromise the bearish outlook for sterling dollar. Dollar yen. Dollar yen has seen a nice bounce over the past few sessions, but again, if you look back over the past several days, the market is locked within a consolidation, which could still be a bearish consolidation ahead of the next major downside extension below the recent lows at 111.59 and towards and below 110. Again, if we do see rallies right now, they should be well capped with only a push back above 115.62 to compromise that outlook. Euro Swiss. Euro Swiss looks to be on the verge of breaking down below that 2016 base at 106.24. It's done a good job of being supported around that level, but a breakdown below that level seems to be where we're headed, and that would expose an acceleration of declines towards next key psychological barriers at 105. The market would need to establish back above 107.60 to take the pressure off the downside. Aussie dollar. So Aussie continues to show signs of stalling out and exhaustion in 2017 following a very impressive run, and if the market can establish a break and close below 76, it will strengthen this bearish outlook and accelerate declines back down towards potentially medium-term support all the way in the 71.45 area. Dollar CAD. So dollar CAD has extended its impressive recovery out from recent lows below 130, with the market holding above 130 on a close basis, and this suggests that the market could be poised for a resumption of gains all the way back towards the multi-day highs at 136. Again, the market overall is highly constructive, and even though we did see setbacks below 130 in recent trade, this is within a broader constructive uptrend. So a break back above 134 now will further strengthen the constructive outlook and accelerate gains towards 126. Kiwi dollar. So Kiwi continues to show signs of topping out, with the market now breaking down below next key support that was in place around 71.30, and this exposes deeper setbacks towards the psychological barrier at 70, below which will expose medium-term support in the 68.60 area. At this point, only back above 73.76 will compromise the bearish outlook. SPX 500. The S&P 500 has continued with its record run, making a parabolic push in Wednesday trade up to fresh record highs through psychological barriers at 2400. Of course, now the market is focused on next key barriers at 2450, and a break back below 2350 would be required to take the immediate pressure off the top side. Gold. So gold continues with its constructive recovery. The market continues to put in a series of higher lows and higher highs, and this latest break that we saw above the 1240 area exposes a next major upside extension towards 1300 in the days ahead. Look for setbacks to ideally be supported above 1216, with only a break back below 1180 to compromise the constructive outlook for gold.